traders here in the room with us today. Always a treat when that happens. John, hope you are having the best morning ever. Hope living in the shadow of your younger brother isn't affecting you too terribly much. Wow, everybody's jumping ship. Oh no. Guys, remember this is an educational room, informational purposes. There's your warning for the lawyers. Um, and then we're going to look at the news. 8:15, we had a little bit of news. That red high impact ADP non-farm employment change. At 10 a.m., guys, we're looking at it again. ISM Services PMI. Checking news every day, making sure that there's not something happening that could disrupt. Can everybody hear me okay? Am I coming through all right? It's weird when I'm a smart aleck to my brother and nobody responds. Yep, okay, we're good. 10:30 a.m., you crude oil traders, inventory's coming in. A lot of times on inventory, you'll see them jockey for position a little bit before. So don't be surprised if crude oil slows down. And then at 10:30 a.m., they make some decisions. And then at 2:30 p.m., President Trump speaks, which means who knows? Sometimes he says stuff and the market goes crazy. Sometimes they ignore him completely. That's why it is medium impact, but you are aware that it is going on. So guys, we're going to go through the day. We're going to do it like we always do it. We are going to talk about, on NinjaTrader, we're going to talk about a high probability trade, guys. We're going to talk about a trade that you can prove wins more than it loses, and that is what we call having an edge. An edge means that you've seen it, you've practiced it, you've proven it, and when the rules are true, you've put yourself in a position to win more than you lose. That's all it is. An edge doesn't guarantee wins. What an edge does is it guarantees that you're trading the same thing, that you're focusing on the process, that you're doing what you have proven wins more than it loses. And then as we get into TradingView, I need to bring up my link here. Sorry, I kind of missed it. As we get into TradingView, we're going to do the exact same thing, guys. We're going to talk about a trade that provides an edge, and I can't seem to figure out where it went. There it is. We're going to talk about a trend trade over here on TradingView as well. There are rules that are given out each and every morning. If you've ever watched the highlight reels, I stress that we have rules. They are given to you in the form of NinjaTrader, the KISS plan. This plan is a stepping stone in your learning journey, guys. It only takes 2 charts. There's really only 3 rules, and it even includes management. This is everything you need to be successful with the software. And what you're doing is you're learning the process that creates the edge. And then there's the same thing for TradingView. Guys, I consolidated this one a lot. TradingView is in one plan. How to read your large chart, how to find your entries on the small chart. I'm going to give both of these to you in the room right now. John's out of here. John, have a great morning. And I'm also providing you, out of your room, more to do. Go pretend like you have a business to run. I'm going to give you guys spreadsheets, guys. These are the trade looks. This is what it looks like on TradingView when you're taking that trend trade or that momentum trade. Some thoughts on management, reasons not to trade. And then there's also the exact same thing for NinjaTrader. What it looks like to have the 3 rules met, what it looks like to not have them met, examples of the pattern that we're learning right now, about 500 of them. Management ideas, and guys, both of these spreadsheets have trade tracking. Now, trade tracking leans heavily on what this room is all about, guys. Every time you take a trade, you're going to tell me, hey, Mark, this is what I did and this is what I saw. You're going to annotate your chart so that you can get the absolute best feedback. You're going to say, I saw momentum. There was the potential to break. I took a pullback at an area inside of triggers. And you're going to learn this language that describes the advantages, and the advantages are what gets you into a trade. Well, every time you present in my room, it's like getting a private session. Whoops. Every time you post in my room, where the heck did I go? You're going to get feedback on everything that you saw, everything that you did, everything that happened. And you're going to begin to see patterns evolve. You're going to see the things that are bringing you success. You're going to see the things that maybe are taking that success away from you. And it's going to set you up for the day with a little bit of study. So the path to get to where you want to be has been consistent for as long as I've been around Nexgen, guys. Learn your rules. You are in control. I can't stress that enough. You are the only person in control. And I think Victor put it in the room earlier, and we'll read it out loud later. He goes, they either give me what I want or I simply don't trade. And guys, that mentality going into it, where you are in the catbird seat, you are in control. Nobody can make you enter. So learn the rules that provide an edge, practice the rules that provide an edge, and then post your work in the room. This is what I'm studying. This is what I'm looking at. Am I doing it right? And then more importantly, guys, just simplify. Stop overthinking. You don't have to. Trading doesn't have to be stressful, guys. Trading on both platforms is really taking momentum, coupling it with absolutely nothing in the way. We call that a clear path, and then defining your entry. And when you can take those three advantages and create that trade, you're creating the highest probability trade that you could ever take. You're looking at a trade that typically wins in the 70% range. And it's difficult, unless your management is really suffering, to not do well with that percentage. And then because you're learning advantages to turn into a trade, you'll notice if one of them's missing. And it doesn't have to be the momentum, it could be any of the three. And that puts you into a medium probability trade. So high probability means that each indicator on every chart agrees with the rules for the trade. Triggers are the strongest. There's nothing in the way. Entry is clearly defined. Hey, good morning, Halvey. Welcome to the room. And when one of those advantages goes missing, you look at your chart, you say out loud, you frighten the pets, you find yourself in a medium probability scenario. Halvey, if I was any better, there would have to be two of me. Do me a favor. Don't solicit in my room. Nothing personal, but we're not here for you to solicit for senior developers. We're here to learn how to trade. So I'm going to go ahead and ask you to leave the room respectfully. If you're here to learn to trade, that's cool. You now know the rules. Otherwise, no thank you. Guys, medium probability trades mean that most of your indicators line up for a trade. However, a small issue exists. That issue will be one of your advantages is gone. And these medium probability trades need to be managed a little more assertively, taking quicker profits, getting to break even. And if we're being completely honest, guys, this is going to be the majority of your trades. And it's your study of the high probability trend trade that's going to put you in a position to take these medium probability trades. You'll also find yourself in a position where you're looking at your charts, you're reading your indicators, and you say to yourself, man, I'm missing 2 out of 3 of my advantages. Or worst case, I'm missing all of my advantages. And guys, now you're in a low probability scenario. These are less likely to win. These typically come with higher risk. You can choose to take them, and you'll see people in this room that do choose to take them. But remember that you're in control of the entry. I'm not here to tell you when to enter. You're here to make good decisions based on your chart reading. You'll spend about 90% of your day reading your indicators, about 10% of your day actively trading. But knowing what is working for you, and most importantly, knowing what's working against you, guys, it helps you make decisions not only on entering a trade, but how aggressively you may need to manage it. So as we go through the day, we're going to learn rules. I want you guys flooding my room with pictures. We're going to give feedback on everything that you present. We're going to keep it very simple. I want you taking a lot of pictures and focusing on advantages, not so much the trades, guys. The trades are a result of the advantages. And we're going to do as much live action entering and managing as we possibly can. And the only way I will enter a trade as if it fits the rules for the plans provided, whether it is TradingView or whether it is NinjaTrader. And I'm going to tell you guys, these plans are very basic. They're remedial. They're super conservative. They're designed to teach you to read your indicators. They're designed to optimize your chances of success as a brand new user. And then through study, simulation, class feedback, and practice, you're going to write a plan that suits your needs. So we're going to get into it. We're going to start on the feedback. One of the things is my room has been consistent for the last 5 years. There are a million videos of the very basic rules. And I'm going to give you this link right here. The first hour, this is from Monday. This was super focused on giving you that foundation. Go through it, look at it, ask questions about it. But we're going to get directly into chart reads, guys. We're going to get directly into feedback. And I want you to understand, I have absolutely no desire to be the trade police. I have no desire to tell you what you should or should not do. There should be no expectations of that sort of direction from me. What I'll do is I'll look at what you told me. And if you tell me I had momentum, that's rule number one. And you told me that, well, the area wasn't broken, but it had potential, rule number two. And you say, and then I bought a pullback at an area inside of triggers, rule number three, I'm going to go through your chart read. We're going to make sure that it's accurate. Halvey, once again, get the hell out of my room. Let me go ahead and block you. Because, boom, you are blocked. GTFO, buddy. You can't come in here. You can't come in here, guys, and try to sell things. That's not okay. So now I got to get him out of here and get him blocked, and he is no longer invited. So guys, we're going to get at it right now, and we're going to look at what you guys are doing. And Pete got us going. And Pete says, Mark, when I have momentum, when there is separation between the small and large, when the colors match, when there's that big gap between the small and large triggers, this lets me know that the odds are favorable for the market to continue up in the direction of the green background, in the direction of the trend. And Pete says, and when there is absolutely nothing in the way between me and that red line, I'm going to ride that momentum right up to trouble, and I'm going to go ahead and get paid. And Pete, perfect use of momentum and absolutely nothing in the way. Those two core advantages, the momentum and path, guys, when they are present, you're going to find a lot of ways to use the software to your advantage. And Pete does it as well as most, and he does it both directions. There's that separation in a downtrend, guys. Smalls below the large, space between the two. This is rule number one personified. This is momentum. The odds are favorable for the market to continue down. Pete had room to get to that big blue line. He jumps in with all the momentum, JTFI, and then he added in on the snapback. I like that. All four off right at the fib. Understanding where the market is likely to go with this level of momentum gives Pete the ability to create intelligent targets. Nicely done, Pete. 2 for 2, baby. And then I saw the third one. It's just as good. Once again, there's momentum. And this time, Pete says, you know what? That area, because of the strength, because of the trigger location, that area's got the potential to break. I'm going to let the market get below the area I'm hoping to break. I'm going to use that momentum, and I'm going to see if I can't make a little money. And once again, 3 for 3, Pete. Nicely done. And guys, you're going to get to the point through your chart reading where you will understand where the market is likely to continue. You're going to use that for trend trade entries. You're going to understand where the market is likely to go. You're going to use that for targets. And you're going to understand where the market is likely to stop, guys. And we call that termination conditions. And it's a very simple recipe. Every time your price bars reach a horizontal line on your large chart, I want you to count triggers. I'm giving you the recipe to identify a termination condition right now. If none of your trigger lines get above Fibonacci resistance, that's a termination. It's a red 0. Absolutely no trades into the area. If two of your lines get above that area, but two remain below, and you've got momentum, guys, it's still a red. It's not your best look for a breakout as a brand new user. You experienced users will latch onto this one and find opportunity. But if you're brand new with me, it takes 3 of the 4 trigger lines above the area of resistance. And now that breakout is a little more imminent with all that momentum. It's yellow. We're going to use caution. It's still only medium probability. But once all of your trigger lines get above resistance, well, resistance behaves as support, guys. And now your path is clear. Rule number 2 is met. So we're going to see trades in the room that embrace each and every one of these. As a brand new user, your highest chance of success will come from that clear path. So count triggers every time you get to an area. And we're also going to see trading view. I love this. You will call your shots. Is this you, Victor? Everything is going up. And Victor says, man, I triple dog dare you to pull down here and give me an entry. Did you get it, Victor? There it is. Look at that. Victor says, this is what I need because I know the plan, because I know my rules, because I know exactly where my trade originates. And the market said, oh shit, Victor needs us. Pardon my French. Victor drew a box. Let's go to it. And I can't wait to see what the result was. Here's my brother, John Novak. Once again, there's that separation between triggers, letting him know that the momentum is overwhelming to the upside. There's 2 triggers through. I told you you're going to see this. And there's a pullback right to an area inside of triggers. John Novak takes his entry. He says, it's early. I'm going to get paid on half. And the other one, with momentum, he's looking for Fibonacci resistance. And guys, it absolutely made it to that area of resistance. Nice looking trade, John. Victor, once again, come on. John Novak again. The tail end of momentum. Still room to the fibs. Catches a little pullback to an area inside of triggers. Guys, remember that phrase. Pull back to an area inside of triggers. A little retracement on a small chart is more likely to bounce from a fib, a midband, or a yellow 1-to-1 inside of triggers to continue in the direction of the large chart advantages, momentum and path. Right there is your perfectly defined entry. And then Pete using momentum again. I love it. Separation between the small and large. Guys, this is the best of the best. Pete says, I'm not going to trade into a fib. That's ridiculous. It could stop the market. But when I get above that fib, I'm going to ride that momentum. And my job is to get paid. And I want you guys to see something. In at 55, out at 58. That's a quick, that's 10 ticks. That's $125 on the NASDAQ or on the S&P. And then Pete says, I'm just going to trail because there's a million opportunities in the market. I don't have to get rich on every move, but if I collect $150, $250 a pop, it's very difficult to not make a living. And Pete, really well done. That's it. No prairie dog. See, even Victor recognizes the good work, Pete. All the momentum. Room to trouble. In above trouble. And Pete says, there's my first trade. Let's do it again. See if we can't get there. Nicely done, Pete. Momentum and path. Momentum and path. I want you guys to embrace that. Momentum and path. With momentum, with room to trouble, there's the pullback to the area inside of triggers. There's expectations, guys. Did it make it, John? I believe it did. I believe John gave the magic phrase in the room. Bingo. When the market fulfills expectations, when the idea of momentum and path takes you exactly where the market said it was most likely to take you. Really well done. You got out of that one just as news hit? Very nice. All right, Victor says, trend trade, triggers up. Small triggers up, defining the direction for Victor, saying I'm only trading with that momentum going up. Triggers are on the, or prices on the weak side, and that's the downside here. That's below. Manage aggressively, assertively. Small chart, price pulls all the way back to the area, closes on the correct side of the triggers. It's the perfect trend trade. Victor's in at 51. He takes profits at 58. He takes profits at 58 again, making sure my job is to get paid. There's no reason to give it back. Easy $310 trend trade. Perfectly done. Beautiful execution, Victor. Guys, this is the trade from the plan. This is the one trade that so many of you are passing evaluations with or finding consistency with. This is the same trade that a gentleman posted in the room the other day after 20 of them was sitting at 70% winners. Trend trade again, triggers up. Price on the weak side, below the triggers. We'll talk about this in just a second. Room to trouble. Small chart, price pulls back to an area. There's your close above the triggers, and it's above trouble. Victor gets out at trouble, doesn't give any back because his job is to get paid. Another $210. Over $500 by 8:40 a.m. That's pretty impressive. Over $500 before the market ever opened, guys. If Victor stops today and maintains that level of consistency, he's on path for a $126,000 year based on only $500 a day. This is what we do. We teach you how to recognize advantages, hand you a plan with very specific entries, and then it's on you to learn how to use it, to read your charts, to execute those trades. Large chart for ES and crude oil. Nothing to do. Time to go make an omelet. I love it. No short trades. It's already been where the long trades are going. Long trades got there. Short trades have nothing. Zero triggers through. Zero triggers through. Zero triggers through. Pete says, hell, let's go scramble a few eggs. Nicely done, Pete. Great patience. Momentum, path, pull back to the area it triggers, rinse and or repeat. Nicely done, John Novak. I like it. Uh-oh. Momentum, path, get in below trouble, and nice job riding it all the way down to trouble, Pete. It did go south, didn't it? Technically not a strong top. It didn't reach the fib. Rolled down, all the momentum below. I mean, come on, guys. So that's actually all the pictures presented. If you are on NinjaTrader and you're looking for the highest probability trend trade, I'm going to give you the keys to the kingdom right now. For now, Victor. This is everything you need to know about the high probability trend trade in 2 pages. This is reminding you that momentum and path, that's your goal. Learn those 2 concepts. It's going to give you everything you need to find more. It tells you the rules, only 3. It tells you exactly where to find them. It defines the indicators, trigger lines, areas. It talks about identifying momentum. There's a picture. Momentum is consistent 100%. Momentum is separation between the small and large triggers. In an uptrend, everything is going up, the gap is there. In a downtrend, everything is angled down, the gap is there. It never changes. Strength is always strength. Weakness, when there is no gap, is always weakness. And guys, when you have weakness, anything can happen up or down. The advantage is gone. Rule number 1 is no longer in play. That is a large chart rule. You'll use momentum on a small chart as well for potential to break trades. And then it goes down and it says, well, what can be a termination condition? What am I looking for? Horizontal lines on your large chart. Whether it is a divergence high, Fibonacci resistance, yellow 1-to-1s, divergence low, or Fibonacci support. They are all equally as important. And these are the areas where the people that control the market are most likely to make decisions. You have that count your triggers recipe. Don't trade Be patient. Uh-oh, here we go. Let's giddy up. Let's go make some money. And guys, that's really what we're looking for. We're looking for momentum, those strong triggers. We want to couple it with nothing in the way. And defining a termination condition is so easy. Count triggers. And then guys, we are going to define our entry. And I'm going to go through it real quick because entry is just a pattern, and it's a consistent pattern, and it's a happens every day pattern. And it's that pullback to an area inside of triggers. So what I'm going to do is I'm going to pull this sheet over to the side, and we're just going to go through the entry, guys. When the rules are met on the large chart, you're going to turn your attention to the small chart, and you're going to find your entry. And the first thing that you need on your small chart is a reversal bar, because the rules say I'm going to buy a pullback at an area inside of triggers. So the reversal bar begins the pullback. It lets you know that it's begun. But the reversal bar is not your entry. We're better than that. Once I get the reversal bar, I'm going to identify where the retracement is most likely to go. And guys, price returns to these large triggers, whether they're smooth or stepped, large or synthetic. You have a retracement zone from the very top line to the very bottom line. And the tighter these are one on top of each other, the smaller that area becomes. But trigger lines are not your entry. We're even better than that. I'm going to find the areas within that range. Fibs, mid bands, and yellow 1-to-1s if they're inside. So I need that area inside of triggers. Fibs, mid bands, yellow 1-to-1s. And inside is the key word. You know exactly where the market may retrace. Now you know exactly where it's most likely to bounce. From the highest area, happens to be support, Fibonacci, to the lowest area, it's only a mid band. That's the smallest box ever. That's where the market is most likely to bounce, where it's most likely to continue with the momentum and the path on the large chart. So you, with just a wee bit of study, will develop the courage to activate a limit order just above that highest point of support. And you're going to tell the market, like Victor said, you're going to call your shots. I dare you to come back to that line, because if you do, if you show up at my limit order above the area inside of triggers, don't forget the phrase, you're in a long position. And you have the advantage of a market where the odds are favorable for it to continue up in the direction of the trend because of those strong triggers. And you have the advantage of a clear path, nothing in the way, nothing to create a bounce against your trade. And you have the advantage of having entered precisely where the market was most likely to continue with that trend. Guys, this is one pattern. That's your high probability trend trade entry. It doesn't involve extra indicators. It doesn't involve more time frames. It is literally momentum, separation between the small and large. It is at least that 3 trigger potential to break, all 3 triggers above resistance. And guys, it is a pullback to an area inside of triggers. It is one look that sets you free to find the rest of the looks. You can study this look. Does everybody see that tail? That wick, whatever you want to call it? That tail is this pullback. You know you want to enter all the way up here. You don't do it till down here because it gives you the absolute most room to get to your targets. And guys, when you enter low, your stop is placed just beyond that retracement zone. That's where the market should not go. You're going to know exactly what your risk is before you ever enter. You're going to know exactly what your profit potential is before you ever enter. So all you've really got to do is learn that pattern. Let's go see if it set up at all ever in the NASDAQ. I know that it did. So there is all of my momentum. There's one of those little tails with room to trouble. What's it look like? So great question. Great question, Kerwin. Sometimes there's more than one tail. So let's do this. Bonk. I'm going to take the cheater off of here. And I'm going to put it over here. This is going to be your look. I want to do something real quick. Just for the sake of this lesson. Let me let this reload real quick. So Kerwin, we're going to go through an entry together. I think this is one of the greatest exercises you guys could ever do, because what you're going to realize is that you'll call your shots, Kerwin, before you ever take the trade. And the reality is you'll never see the tail over here. By the time that tail is forming, you're already on your small chart. So let's start with the advantage of momentum. And I'm just going to go just like this. Whoops, that's the wrong side. Here we go. So Kerwin, this is our most current bar. And I want you to see all the information this most current bar gives us. The first thing it tells us is the direction of the trend. So if the background behind that first bar is red, the trend is down. And it just means I'm looking for rules met for a short. Does that make sense, everybody in the room? Trading with the trend. Making sure that you're in tune with what the market is telling you. And when it says down, let's go down with it. Everybody good with that? And then Kerwin, rule number one says you must have strong triggers. And that look of strong triggers is always consistent. It means that your smalls in a downtrend are below your large. And do you see the space in between the two? What that tells me is that the odds are favorable for the market to continue down. So strong triggers is always the same look. Does that make sense? Is everybody following me so far? I know you're probably off making millions right now, guys, but if you need these lessons, don't be afraid to tell me that you do or do not understand. And then Kerwin, the next thing that we need is that clear path. Whoops, he says. And a clear path is defined. Come on now. This is rule number 2. No termination conditions present, which means that we're looking at the very, most current price point. So all the way down here, do you see how there is no fib? There is no mid-band. There is no yellow 1-to-1. There is no divergence low. And if we look above us, you can see that 3 trigger lines have made it below the previous problem. Does that make sense, Kerwin? This is that potential to break look. This is that look that says, hey, with all of this momentum, 3 triggers through, let's go define an entry. And Kerwin, the market is all the way down here. It is so far south, you're thinking, oh my gosh, how am I ever going to get paid? Has anyone ever felt that? I've felt it. But watch this. One of the most important phrases that you could ever learn, and I want you to write this down, and I'll drop this picture in the room. The entry rules say, for a short trade, I will sell a pullback. That's that little retracement that goes against the big chart. I will do it at an area. And here's the kicker. It'll be inside of triggers. And if you learn this phrase before the small chart ever starts retracing, there's my triggers. I don't have any areas inside. Here's my areas. Well, if these end up inside of triggers, guess what? The recipe is true. So this is where the patience comes in. This is where the fear of missing out kicks in, because that small chart continues down and you panic, and it continues down, and you're worried, and it continues down. All the while, the trigger lines are working their way down. And now I've got one area inside of the triggers. Are you guys with me so far? The retracement hasn't even started. And I know exactly where my entry is coming from. And then the market continues down. And it continues down, and it continues down, and it continues down. Oh my gosh. and I finally get the reversal bar. And now my area for entry is just a little bit bigger. The mid-band is about a tick below. The area is up here, and somewhere inside of this box is where my trade is most likely to occur, where the market is most likely to continue down. I'm going to right-click. Whoops, I can't do it because the market's trading in a different spot. And I'm going to put a limit order just a little bit below the lowest point of resistance, the resistance closest to that reversal bar. Are you guys with me so far? The market's not even there. I know right where my order needs to be. And then they start to come up, and notice how the mid-band comes down a little bit as price comes up and everything is lining up. Heck, I might even drop my order just a little bit because look at the momentum on this large chart. How far are they really going to make it? And then it comes up and there, boom, and now I'm in an entry. Now I'm in the market. Now I am at the point where the market is most likely to continue. There it is right there. I've got all the advantages of the large chart. And here's the cool thing. If this is going to be one of those trades that typically wins 70 to 80% of the time, I'm just going to put a protective stop just above the triggers, 4 or 5 ticks above the triggers. That's where the market shouldn't go if this is going to be a winner. Intelligent traders manage risk before they ever manage profits. You manage risk by having momentum. You manage risk by having room to trouble. It's all the way down there. You manage risk by entering where the market is most likely to continue. Kerwin, does all that make sense? And if you look at the large chart, nothing's changed, and it's about to get pretty cool. So I'm going to put this box back down here, and look at that, right off of our entry. Now I want you to see something, Kerwin. I'm gonna bring the large chart forward 1 bar. There's your tail. Your tail, we're not waiting for it. Your tail is the pullback to the area inside of triggers. And the large chart continues down. And the small chart continues down. So you can use this concept to go back. And let's see if we can find another one. Because I think this drill, it slows the market down. And here we go. And I'm not even going to get too big into the rules. But there's all that momentum. Once again, we'll do it this way. Because that one didn't reach Fibonacci support. And now let's go back and let's see where that tail ends up on a small chart. Stays in the range, off of the midband, and continues down to the fib. So there it is again, with momentum, with room to trouble. The market doesn't make it outside of the retracement zone. You do get run over a little bit, but then it does everything the market suggested it would. And if we scroll back again, boy, the NASDAQ moves, doesn't it? There's another one. There's all the momentum, potential to break. What's it look like over on the small chart? There's your pullback to the area inside of triggers. So Kerwin, we're not trading tails. By the time the tail forms, your trade is all the way down here. So it's important that you keep it sequential, that it's like a flow chart. If I have momentum on the large chart, if I have a clear path or at least the potential to break, I will buy or sell a pullback at an area inside of triggers. And guys, this is the process that yields results. Kerwin, we're using the tails to go back and study it, to build confidence in it, to recognize that yes, without question, without hesitation, when I have momentum and path, that seems to be my pattern. And the NASDAQ moves so much. With momentum and all of that path, there it is again. Pull back to an area right inside of triggers, like clockwork. And this has been happening for decades. Nexgen has taught this methodology, there it is again, for almost 20, 30 years, 20 years live in classroom. So the idea is that if you see that price reaches an area and none of the triggers break, look at the bounce. Look at the bounce. That's your termination condition. And as we come through, don't quite have separation, wasn't really the best momentum, so we're in a little bit of a holding pattern, waiting for things to happen. And guys, the high probability trend trade, Ron, here comes your nickel, is not your get rich trade. Always. There it is again. I probably did. The high probability trend trade is the trade that teaches you to read your indicators so that you can make good decisions, so that you can enter the market, so you can manage trades. The NASDAQ is crazy fast, guys. Someone sent me a message yesterday and said, what's a good market to learn on? I'm going to tell you right now. Crude oil is way more mellow, but the rules are the same. Momentum is always momentum. Termination is always termination. Did we find a trend trade in there this morning? I'm not sure that we did. And guys, the S&P is way more passive. But again, momentum is always momentum, and a termination is always a termination. And your job is to find the easy ones. Here we go. With momentum, with room to trouble, what did it look like? Wow, there goes my chart. Egads and little fishes. What did it look like? Not quite the rules met. Maybe not your trade. So you back up and you say somewhere in there is one of those tails. Somewhere in there is a beautiful look. Somewhere in there, the market gave me exactly what I needed. And when I say 90% of your day is spent waiting, guys, I mean 90% of your day is spent waiting. 10% of your day is active trading. So that's the Ninja Trader lesson. Let's go through how to read a large chart on TradingView, guys. It's still only 2 charts, but they use minute bars, 15 minute and 1 minute. So it's a little different. 15 minute is your roadmap, guys. Key targets, turning points, terminations, no different than Ninja Trader. 1 minute is an entry chart, defines the immediate strength. So when you're reading, boom, 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 boom. I like sound effects. When you're reading a large chart on TradingView, the workspaces that I provide for you don't have large triggers, don't have background colors. You will define direction with nothing more than the small triggers, guys. It is either up or it's down. Good morning, Miss Jen. Or good afternoon, I'm sorry. I will always reset my video for you. There you go. Is that better? Things get fuzzy as they cross the pond. And I want to show you guys something. I can take out the second step and you could still use your large chart to find a trade. If the market is going up, go up with it. That's the path of least resistance. It's not the only trade, but this is your best trade designed to optimize your chances of success. If the triggers are going down, go down with them. Make it easy. You know, John Novak had a broker back in the 90s tell him, Mr. Novak, I can guarantee you $1 million in your account by the end of the year. And John says, wow, that's amazing. How do I do that? He goes, fund your account with about 3 million. Fight the trend. You should be down to $1 million by the end of the year. And Phil, that rule alone keeps you out of a lot of drama, doesn't it? It keeps you patient. It means that you will have the perception that you're missing out on moves. But what it does is it keeps you from fighting, guys. Going with the 15-minute small triggers is money. And then making sure you have room to targets. Not trading directly into trouble. And that alone is enough to utilize the large chart and really um, give you everything that you need. But I'm an overachiever. So let's add the second step on your large chart read before you ever go look for an entry, guys. And it's pretty simple. You're asking yourself, where is the most current price in relationship to those small triggers that have defined your direction, guys? And this is how you're going to know exactly how to manage your trade before you ever enter. There's only three options. The most current price, the highlighted price, can be left of the triggers, it can be right of the triggers, or it can be inside of the triggers. How easy is that? If you know up and down and left and right, you have everything you need to be successful. Guys, where you are in relationship to those triggers will set you up for management. If you are left of the triggers, you are on the strong side of the triggers. Strong, there's that word again. This is the best of the best. This is where 1 minute areas have the highest opportunity. They're most likely to break. They are not guaranteed to break, but they certainly are more likely to from the strong side of the triggers. This is your big move look. This is your best of the best. It could be to the right side of the triggers. And guys, this is whether those triggers are up or whether those triggers are down. The left-right doesn't change. If you are right of the triggers, you are on the weak side of the triggers. You're still looking to trade in the direction of the small chart trend. But guys, this is where 1 minute areas are most likely to bounce, to hold, to kill your trade. Your management plan should be, I'm going to get paid right at these areas. I'm in a GTFO. Wait for the next opportunity. But when you're on the strong side, you may hold for bigger moves. If you are inside, this is what I consider to be kind of a medium probability scenario. And the medium probability scenario means that when I reach that first area on my 1 minute, I may take half of my profits. I may take a portion of my position off. I'm going to get to break even. I'm not going to give money back at this point, but I may hold for a little bigger move. So before you ever enter the market, you know exactly how you're going to manage it. And Phil says, check it out, Mark. The rule alone will keep you out of a lot of drama. Here's a picture from yesterday. Weak side of the small triggers, but the small triggers are still up. What's the momentum read on this? Well, the momentum read, it means that 1 minute areas are more likely to hold, Phil. That's it. Which means that if you took a long trade here, it was directly into trouble. You probably got paid at the next line of trouble. Does that make sense? And if your read were from the strong side, you may have taken the exact same long trade and said, you know what? I'm not going to worry so much. I'm going to see if it keeps going with that momentum. And if it were the transition, you might have taken half off here, gotten to break even, and said, let's see if they want to go to the next area. So before you ever enter, you'll know exactly what your management plan is as a brand new user. They're likely to be more trouble. So from the weak side of triggers, let's go and see if we can find a live example. Well, not yet, huh? Okay, so we're from the weak side of the triggers. But the triggers are down. We're looking for shorts. Hold on. Boom, 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 boom. There's your close below, but do you see how the areas are holding? The areas are creating big untradeable bounces from the weak side of the triggers. There's your lesson in a nutshell right there. They are down. I am weak side. I do have room, but look at the shenanigans being created by all of these areas. And now let's look at the other side. There's your strong side. Do you see it? Smash, boom, bang, crash, zing, pow. straight to trouble. Pretty cool, right? And these triggers are strong as well. So I'm on the strong side. I've got odds favorable momentum. I'm not as nervous as I am from the weak side with all this stuff creating problems. Do you guys see it though? Zoom, baby. Egads and little fishes. And I'm telling you right now, you will say, I'm on the weak side, but I sure hope it breaks. I'm on the weak side, but I'm going to trade into that area anyway because the large chart has room. I'm on the weak side. I'm not going to get paid. I'm not going to get to break even. I'm going to hope. I'm going to wish. I'm going to want. My father-in-law used to say, wish in one hand, poop in the other. Tell me which one fills up first. Guys, you know exactly how you need to manage that trade before you ever take it. And now all you have to do is have a couple rules for entry. And it starts with the 15-minute not trading directly into areas. Guys, if you can't answer yes to that one thing, why are you looking for a trade? Why are you hoping areas that could stop the market break? And then your 1 minute is not trading directly into areas. This is the best of the best. Optimize your chances of success. Phil asked me the other day, he goes, yeah, but what if there's a lot of areas? Well, guys, if you're on the strong side with a clear path, do you think you might be a little more inclined to take a chance as you grow with the software? I would. I don't, because I stick to the one that I can prove wins more than it loses, and that's not trading into 1 minute areas. And then the entry looks the exact same every time, every trade. Buy or sell a pullback, that push down, the moment my small triggers roll on my 1 minute chart, I'm drawing boxes down here. Mark, you can't draw boxes down there. You don't know where the market's gonna go. You're full of beans and so is your old man. Well, that makes Victor my old man. Because when the small triggers rolled, he knew exactly where his trade had to come from. And clearly he's in cahoots with the market. Guys, you will call your shots. I don't care if it's NinjaTrader or TradingView. You will call your shots. And when you get to the area on TradingView, 1 minutes are strong. They're mean, and those small triggers are aggressive and angry. Your entry for a long trade is an up bar, not a down bar, but an up bar that finishes both corners above those small triggers on the weak side of the triggers. That's your entry for the high probability trend trade. Why? Well, reversals come from the weak side of the triggers, and we want a small chart reversal to go with the big chart advantages. Does that make sense, everybody? Do you guys know I took a phone call once, and I love it. One of my favorite phone calls. I had a guy call me. He was doing a demo with the software, and it was pretty funny. He goes, Mark, respectfully, I think you're full of shit. Pardon my French again, guys. I don't mean to swear. And I said, why? And he said, 3 rules is not enough to be successful. There is no way on God's green earth you could only use 2 charts and win. There's no way triggers and areas are going to give you what you need. You're full of crap. And I said, you know what? That's fair. Do me a favor. Go circle some tails, right? Go do some study. From the weak side of triggers directly into trouble, tell me how many times the market bounces. And what he did is he took the time to actually learn the plan. He didn't have his idea of strong triggers. He took the textbook idea of strong triggers and no termination conditions, an area for entry. And when it was only the potential to break, he followed the checklist provided. And he did that for about a week. And he came back And he said, yep, 84% winners. I guess I just didn't understand the rules. I guess I was overthinking it. I guess I was adding my own rules or my own interpretation of the rules. Has anyone else done that? So when I teach this room, guys, the one thing that I really ask you to do is don't focus on the trade. Focus on the advantages that create the trade. Focus on learning strong triggers first. Man, which one do you want? I got everything for you, Justin Raygun. You ready? I'm going to give TradingView, Nexgen. I'm going to give Plant or Ninja Trader. I'm going to give the spreadsheets as well. If you don't get it in my room, you don't need it. True story. Hold on. I'm trying to get them over there. Get in. Son of a gun. All right. There is the Ninja Trader trade tracking sheet. There is the TradingView trade tracking sheet. There is the TradingView super simple KISS plan. There is the Ninja Trader super simple KISS plan. So guys, on this sheet, and I'm gonna pull it off to the side real quick. There's about 50 pictures showing strong triggers and describing exactly what it means. Go take 25 of your own. So Justin, your job, should you choose to accept that you want to be a good trader, a confident trader, is to go take pictures on your large chart. Not trades, pictures. And say something clever, like smalls below large, space, momentum, rule 1 met, strong, right? Create that correlation. Oh, gee, show me a picture. Don't make me chase markets looking for timestamps. Show me a picture. Write the rules on there. Tell me why it was a trade. Anything could be a trade. That 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 could be a trade. Right? I sound like Oprah. But is it a trade that you can prove wins more than it loses? Is it a trade that you can say it repeats itself? I can identify it, right? Only 2 triggers through trouble. Divergence prints. It might go up, but this is a trade. This is a pattern that typically loses more than it wins. Because I'm not coming from a termination that reversed the market. Divergence is a loss of momentum. I need momentum to feel comfortable breaking this area. The KISS plan says don't enter at the area inside of triggers. You don't have everything you need to be successful with this trade. And now it may go up, but if you take 100 pictures of this trade, it's more likely to fail, to stop you out, to go lower. And possibly, if I were a gambling man, say they were probably hoping to get to this fib. They've already shut the buyers down all over the place. We'll see what happens. Trend trade in Spanish. Gatillos bajando, triggers down. Price in transition. Space in relationship to the zone is safe. Is that right? Proceed with caution. Small chart pulls back. Danger. Peligroso, sí. Small chart. Why not chart pequeño? That's Spanglish, Victor. It pulls back to the area. It closes below. There's room to trouble. And Victor says, yep, rules met. Let's make some money. 8 points a contract, 415. Beautiful. Even in Spanish, it works because it's just a pattern. Does that make sense, everybody? It's just a pattern. That's all it is. They still haven't really gone anywhere here. Next, don't do it. I don't know. I can work my way through Spanish. I can't necessarily work my way through Italian. So OG, I wasn't trying to knock you down there, but what I'm saying, at 9:28 Eastern, what was it doing? Now I've got to go back and I got to chase, right? I've got to scroll back, scroll back, scroll back, scroll back. Oh my gosh, I'm still scrolling back. Guys, if you just post a picture in the room, my life is so much easier. So at 9:28, I'm still not there. Still not there. Still not there. Oh my gosh. Holy smokes. Still not there. Boom. 9:28. So you're talking about this tail right here, OG? Is that the one? Let's look at it. So, OG, I am going to respectfully ask you to go through the process with me. Now, in this room, for sake of argument, the perfect trade is momentum, clear path, in an entry area. Is everybody comfortable with that? And momentum is defined by a separation between the small and large triggers. How do we feel about that particular look? Up here, is there any separation between the triggers? What do you guys think? I sent those in Chinese? No. So I'm missing momentum, right? 33%. Is it scrambling on you, Justin? It's 30 bars, Boaz, but we're keeping it basic, right? We're keeping it basic. So the first read is no, I don't have momentum. Does that make sense, everybody? Now, Boaz says, I've got 30 bars in the same direction without a reversal bar. That's what we call a strong trending market. So, because there's 30 bars in the same direction without a reversal bar, rule number one is assumed. Rule number one is in play because now the market is trending strong. Does that make sense? That is the only time a lack of separation is considered rules met. Are you guys with me? Price did not reach one-to-ones. All four triggers got above trouble. So far, OG, momentum and path. I like it. Now here we go. Can we define a pullback to an area inside of triggers? Holy smokes. I have that as well. Now guys, the NASDAQ is a little different animal. The NASDAQ overruns. That 4 ticks rarely works out well for you. One of the things you can do to bypass it is wait for a reversal bar. Even more conservative, wait for a close on the correct side of the triggers. But OG, absolutely. Nicely done. That would be a great opportunity. That's an opportunity where I would get in on the way up, because these small triggers down become problematic. Very important. What's that, Gene? Not fighting the small triggers? Yes, I agree 100%. It takes us a while to believe it. And guys, there's a nuance in between the NASDAQ and the other markets. And man, I blew out a lot of accounts, Gino. And I tell everybody about it, but everybody still fights it. So guys, your NASDAQ large chart is a 34. It is 3 times bigger than crude oil or S&P, and you can see why. Look how fast it moves on that time frame. Your small chart is a 13.2. That's your large chart on any other market. We had to do this to slow it down, which means that your small triggers need to get punched in the face. Yeah. You got to take one in the clackers every now and then before you learn the lessons, right? I'm going to show you guys what a 5-1 looks like. on the NASDAQ. And this is why I encourage people to learn your patterns on the S&P. I encourage people to learn your patterns on crude oil before you try to incorporate them into the NASDAQ. This will be the 5-1 when it loads. I want you to see how fast this market moves. Oh no. It's not working. I might have just killed Ninja Trader. Fighting the small triggers on your NASDAQ Renko charts is a path to destruction, guys. I can't stress it enough. But here's the good news. Oh, look at that. Weak side, trouble. Off it goes. Here's the good news. On TradingView, a minute is a minute is a minute, right? The only difference is the size of the bars in the minute. So you don't see a lot of the fluctuations in there. So depending on which market you're trading, yep, there we go. I was killing my chart. It makes sense to trade the bigger ones. And even more importantly, here's a great example. That market doesn't go up until it gets to the other side of those small triggers. Conversely, that market doesn't go down until it gets to the other side of those small triggers. Do you see it? I don't know how to change the language, but mine are definitely in English. Mine are without question in English. I wonder if there is options language. Check your options and make sure that your language is English. Match windows. Yeah, I'm definitely in English. If it's a challenge and you can't figure it out, we'll find a way around it, Justin. Way to go, Victor. That's why we can't have nice things. That was a good first hour, I think. Price reaches trouble. Triggers don't break. I'm just not going long. Look at the scramble over here. NASDAQ's kooky, isn't it? NASDAQ's not for beginners, guys. It's really not. Crude oil is much easier. Inventories in 30 minutes. S&P is much smoother. Uh-oh. Uh-oh. Dang it, there it is again. That darn pattern. Bringing you guys to the promised land. The magic beans. Look at it. Love it. Learn it. Embrace it. Wait for it, right? Guys, I'm wound up. I'm excited. Life is good. Strong trending market is officially over with the printing of the reversal bar. All right, I'm going to take 5 minutes. I'll leave you guys with the S&P. Guys, here's what I need from you. We're just going to follow the KISS plans for the rest of the day. If I missed a post, hold on. I think Boaz, I believe you are the only post. Nope, I missed Ron. All right, so when I come back, we're going to start with Boaz. Actually, let's do it before we go, right? Boaz says, Mark, did you know that with momentum and the potential to break, you could take a pullback to an area inside of triggers and just ride that mofo all the way down to support? I think this is the one that we did together, isn't it? Potential to break. It's a beautiful trade, Boaz. Beautiful trade. Everything we teach every day. Ron, not a trend trade, but I couldn't see this trade without learning the high probability trend trade first. So thanks, Mark. You're welcome, Ron. Fibonacci support. Everything's above it. Second higher divergence. Get in. Take it up to the reversal bar marker. You know, Ron, John Novak took the exact same trade on the NASDAQ this morning from the low. The exact same look, the exact same entry. And I was like, he's creeping on Ron. Ron's teaching John how to trade. But it was the exact same look, and that second higher divergence is awesome. And then Boaz, strong trending market, 100% clear path. There's your area inside of triggers, and sure enough, it overruns, and you missed it. It was too fast. And I think off the opening, it just is. Guys, someone sent me a message last night, and I love it. So for those of you that need the help with it, he's like, hey, can I send you my trading plan just to get eyes on it? And the answer is always yes, guys. You can always send me your trading plan. And he said, I'm trading the NASDAQ and it's just so fast. Guys, it's okay to learn your patterns on a slower chart and then move up, right? It's okay to play Little League before you try to play Pony Ball, before you try to play AAA, before you go to the big leagues. It's all right. Give yourself a little bit of grace. If you're new, put yourself in a setting that's conducive to success in new users. And you have to understand, you're going to get there. You will end up right where you're supposed to be. We all do. We always do. And I want to do this because one of my hesitations in this room about trading live is you guys seeing losers, but I want you to see how losers are in fact avoidable. And this worked out beautifully. Does everybody see momentum? And it looks just like this at the time. Do you guys see smalls below the large, everything going down? This is a great lesson for you guys. It's beautiful. There's nothing in the way. I cleared everything. Is there any indication that this market does not want to go down? No. Guys, this is the sexiest look you could ever hope for. Now, I want you to see something. We're going to go through the entry rules, areas inside of triggers. As the market goes down, so do the triggers. As the market goes down, all of my areas get to the wrong side of the triggers. Do you guys see it? My mid band, my yellow 1-to-1s, they are above the retracement zone. And there's your reversal bar. Give me a Y, NinjaTrader users, especially new NinjaTrader users. Let me know that you see that if I write down on a piece of paper, my rules say, sell a pullback, add an area inside of triggers. Does everybody see it? Does everybody see that there is no area inside of triggers, that they're on the wrong side of triggers, that they're above triggers? They are literally where the market should not go if this is going to be a winner. Check it out. Some of you sell the mid band, believing it has to go down because of the large chart. It doesn't. You'll use words like it should, it will, it has to. It doesn't. Some of you say, well, 1-to-1s are pretty strong. I'm going to enter at the 1-to-1s because it has to go down. Guys, you are where stops belong if this is going to be a winner. And then some of you say, well, the market hates me, or I'll wait for a reversal bar from the middle of nowhere because it has to go down. And then you lose again, and again, and again, because you're so married to the short trade that never was. Well, that mid band has to hold because this mid band didn't. And it runs you over. Those 1-to-1s have to hold because the other 1-to-1s didn't. And it runs you over. Has anyone ever done that? Gotten so married to a trade that you forgot to pay attention to whether or not the rules were met? So if I have momentum, then I look for the clear path. And if I have the clear path, Phil, then I look for an area inside of triggers. Guys, Nexgen developed this plan on tens of thousands of pictures and thousands of hours of study. And we've consolidated it into 2 pages to give you the highest chance of success. If you're not trading successfully yet, if you are not waiting for momentum and a clear path and entering at the area inside of triggers, whoops, I forgot to put stops and targets in. Since we sold, we'll buy 2. 36.25. My first target per the KISS plan is right there. That's $100. My second target per the KISS plan would be right there at $200. And before I can even move my stops, congratulations, guys. You just took a $300 trade. On the pullback to the area inside of triggers. How's that? That's pretty cool, right? That's what we do, guys, every day. Good thing I didn't take a break. So when I come back, that's what we're going to do. If the rules are met, we'll pull the trigger. If the rules are met, we'll pull the trigger. And if they're not, you guys are going to realize that 90% of your day is doing absolutely nothing. That was pretty cool, right? Makes me look smart. You can look smart too. All you need to do is learn momentum and path, guys. That's it. All right, I'll be back in 5 for real this time. Just a bunch of live trading at this point, guys. 3 divergences in the same price range is a termination condition. 3 divergences in the same price range can terminate a trend, guys. And if you go to the instructions, guys, these are written rules that help you succeed. Man card is safe. This is a safe room. But termination conditions are areas that could stop the market. Those blue Fibonacci support, red Fibonacci resistance, yellow 1-to-1s, divergence highs and lows. Can you guys hear me? We good? There is one small chart termination condition when the rules are met on the large chart, guys, and it is 3 divergences in the same price range. Absolutely not, Apex. This place would be crazy. You have to actually type in the room if you have a question. Sorry. Yeah, it's this room would be nuts if I gave everyone the microphone. So guys, if you see 3 of those cyan lines at a low, all in the same price range, that could stop the trend. That could push it higher. If you see it from a high, that could push it lower. This is the only termination condition on a small chart. And while it might not end the trend completely, very often it pushes you beyond your perfect entry. Exhibit A. Even with momentum and path, 3 divergences gives it a big ugly shove up. Does that make sense, everybody? So as we look at the chart, smalls are above the large. Large are starting to open. We need them to open. And if they do, we'll have odds favorable momentum. It would be entertaining, I'm sure. But Apex, just type your question. You know, every time I visit my parents, my dad tells me shy people go hungry. Go to the refrigerator and get something to eat. Ah, Dad, I'm good. Well, shy people go hungry. Go to the refrigerator, get a drink. I'm good. Well, shy people go thirsty. Guys, this room is designed as a conversation piece. I've got momentum. I've got room to trouble, even though it's close. If I got a pullback, check this out. I can define areas right in that retracement range. Let's make that easier. There we go. Does it fit the rules? If I got a pullback to an area inside of triggers with momentum and room to trouble, does it fit the rules for the high probability trend trade? There it is. Stop has to go where the market shouldn't, about 4 or 5 ticks below. The KISS plan says take profits at $100. If you get a reversal bar, you'll reduce risk behind that reversal bar. 2 ticks, boom. Now we've reduced risk. Doesn't guarantee a win, but it's a much smaller loss. First targets are at $100. It either makes it or it doesn't. Are you guys with me so far? That's it. I'm not in control of whether it wins or loses. What I'm in control of is whether I follow the rules, whether the rules provide an edge, whether it's a solid plan that I can prove wins more than it loses. So I need to get to 41.75. That'll put $100 in my bank. And when it happens, if it happens, I'll go break even. Or I will take what is just a little under 2 points per contract in the form of a loser. Notice that my large chart isn't changing. It's still momentum, right? It's still path. I'm still in the range. My rules have already been met for stop movement, and now I'm at the mercy of the market. Guys, I will never know whether a trade is going to win or lose. The only thing I can be in control of is the execution of the method. I can watch the small chart and talk myself out of the right trade, right? Oh my gosh, the fluctuations, I'm up, I'm down, I'm nervous, I think I'm going to be sick. Or I can just take the trades. I'm on simulator, guys. I can do no wrong. So what do we have to learn? We have to learn the rules for entry because great entries create manageable trades. 2 ticks below the reversal bar so far is working out pretty good. They still might get us. I don't know. If they do, cool. I'll take the next one. If they don't, guess what? We'll make a little money. Pretend money, monopoly money, simulator money. But we're learning lessons. Whoop, there we go. They got us. Son of a gun. It happens. Is anybody's life different because they lost on simulator? I hope not. Strong side. Entry above the zone, room to trouble, pull back to the area, close above the small triggers. You say straight into the VWAP from 36 to 37.5. You're right. It's very close. You get in at 39. It's funny. So you have 3 points here. You have 2.5 to the VWAP. Did you notice that, Jen? It's pretty much the same distance. But the entry at 37.50 is directly into large chart trouble as well. That's okay. So Jen, what you did is you let it prairie dog saying, boy, I sure hope it breaks. That's all it is. Your entry, if it were going to be taken, was down here. 36, but it's directly into trouble. Guys, this look where price begins to break an area doesn't guarantee a break. Not at all. Jen, you had a better chance from the strong side, but it doesn't guarantee a break. That's what we call prairie dogging. And it probably happened right up there. Let's take a look. That's prairie dogging. Guys, that is not a break. That's an oh shit, I hope it breaks. Does that make sense? I hope it breaks, but it didn't. The same way, I hope it breaks, but it didn't. And Jen, this is for everybody, not just you. I hope it breaks, but it didn't. You see that a lot. I sure hope. Oh, rats. I want it to, son of a gun. Pretty cool, right? And guys, that's one of the things that you're going to see a lot, is you're going to have this idea, this perceived safety, because it gets a couple ticks above the zone. Now, if you have odds favorable momentum, both charts, it has a better chance for sure. But your large triggers are just vertical down, just screaming against you. And your small triggers are below them. All makes sense, Jen? I love it, guys. We're gonna get lucky every now and then, and I root for us all to get lucky every now and then. Hell, I root for me to get lucky every now and then. Claire, you skipped that one. It's a perfect large chart read, Jen. Perfect large chart read. So we will celebrate victories. Uh-oh. Trina's like, Mark, I got some work done. Let's talk about it. I love it. Maybe a little bit, Jen. All right, trend trade. Triggers down. Weak to transition. Quick profits, room to profit. So from your entry, you had room to the large chart trouble, 25,480. I like it. Entry after the close on the correct side. I love this. Pulls back. You don't get suckered into trouble. Pulls back. There's your entry. You're in at 10. And you're out at 475. You got room to make $100, Trina. And you do. You make it 3 times over. Doesn't have to be a home run. Trina, this is gorgeous. Everything about it. Everything about it. Great looking trade. You're welcome. All right. They're up. Weak side. Areas likely to hold. Okay. Entry on the correct side, directly into trouble. 27, directly into trouble. At trouble. But you had 9 points to get to the VWAP. I love it. I love it. It's just a trend trade. That zone right there could be problematic. You took a chance. It worked out beautifully. Nicely done, Trina. 2 for 2. It's because you're a little older and wiser now. Everything is up. Transition, strong then transition. I like it. Room to trouble. Pull back to the area. Close on the correct side. Look at the trust. Holding. That's okay. We are going to celebrate all the good. So when I kick your teeth in a minute, it doesn't hurt so bad. Just kidding. It's perfect, Trina. In at 40, out at 42. I mean, my gosh. 2 contracts. That's a $350, $360 trade. Beautiful. And here's the thing, guys. And if you watched my video from yesterday that I posted about your highlights, one of the things, so if you're in here and you're new, Apex, I'm going to go through. Who else is new in here? I'm looking. Mr. Joker, Gab. If you're new, don't be shy. Tell me. Zest. Piney Ski. That's a new name. Sounds like trouble. OG. Guys, this is what I want you to get out of this room as you're learning to read your indicators. Trina knew exactly why. Because the trend was up, because she knew how to manage it, because she had room to trouble, because there was a pullback to the area, because it closes on the correct side, second target position, split tickets triggers would have worked well. Guys, there is absolutely no opinion in this trade. So if you're new with me, learn the rules so that you can repeat the execution, so that you can focus on doing the right thing more often than the wrong thing. Glad you moved your target. Transition out at trouble, right, Trina? Transition, if you're gonna try to hold, you better be break even. I love that exit. Now here's the question. We're gonna do this real quick. I love this. Split targets would have worked well. I won't even take the picture. This is Trina in the moment saying, damn it, I should have made more money. I wanted more money. Why didn't I get more money? Why did I exit my positions here? The market was going to give it to me. Right, Trina? And then Trina says, oh, I'm here to get paid. And if I make $360 3 or 4 times a day, I'm pulling in $250,000. Trina, I love everything about your exit from the transition side. Is the next trade coming? You guys ever heard that, like, when you break up, it's okay, the next one's coming? Boyfriends and girlfriends are like buses. Guys, trading is the same way. The futures markets exchange billions daily. You need to catch 400 to be a 6-figure trader. Rule, no trading while on the phone. I was not paying attention to the large chart, went long, didn't even take a trade. You just jumped the fudge in, right? Didn't wait for a pullback, didn't have a clear path. You just jumped the fudge in. Still plenty of fish in the sea. Do they still say that? They probably do. I haven't talked to they in a long time. I've been hanging out with the same fish for almost 30 years now. Trina, avoidable mistake, right? Distracted, not in the moment, doesn't follow any rules. You just jumped in hoping things went. Still haven't figured out the entry. So what are your rules for a momentum trade, Trina? Do you have rules? Hold on, wrong one. No terminations or zones on the 15-minute chart. So let's do this. Let's see how we did on the momentum trade. I like this though. I like doing this because this is how we learn. And Trina, you are a rock star for posting in my room so that we could do this lesson. All right, so here's our rules. No terminations on the 15 minutes. So 70, 70, it's a yes, right? Strong side of the triggers from 65. It looks like you're on the weak side. Is that right? So the first question, how can I take a momentum trade without the best momentum. You ever made a chocolate cake without chocolate? No. So we broke that rule. And then it's a pullback to an HVA line or area for entry. And the one thing you didn't get was a pullback. You just kind of jumped. 65. If you were thinking the mid-band for the pullback, that's cool. I'm going to give you that one. But I think number 2 is what got you. Because you weren't on the strong side of the triggers, Trina, it did exactly what we would expect it to do. Pull back and turn into a trend trade. Does that make sense? That strong side of the triggers is going to pay huge dividends. Momentum trades will come from mid-bands rarely. You're really looking for something solid that doesn't move. So a mid-band is a moving average. Zones, 1-to-1s, that's your money. Because they're there in the moment, and when they break, and here's a great example, when this zone breaks that was behaving as resistance, it becomes support. That's a beautiful example of it right there. So we're looking for something solid, something that it goes through and then retests. Does that make sense? Yeah. I like where your head was. Just a little something. The large chart wasn't giving you the best look. And then the trend trade was beautiful. And what happened? Because you lost that one, did you chicken out of this one? I just took a loser. I don't want to take 2 in a row. Not sure. Because that was the perfect trend trade. And it did everything a trend trade said that it would, up to trouble. And you made $25 on it. That's okay. First trade of the day, breaking rules, triggers not up, didn't see the VWAP. You went short, right into trouble. It looks like you went long. You went long. Your triggers were down. You went long directly into trouble. There's that prairie dog, right? The VWAP was in your rearview mirror. Yeah, you needed that second cup. But now that we're sitting still and there's no anxiety about loss, no adrenaline from entering, do you see how you fought direction? You also traded directly into trouble. You didn't let trouble break and become support. Cool. I love these mistakes, Trina. And I'm going to tell everybody in the room, if you're not putting your mistakes out there for analysis, you're just going to keep repeating them. Repeating them, did I say that right? If you don't have a conversation, you're relying on yourself. Trina, you might have thought, you put, hell, didn't see the VWAP. The VWAP had nothing to do with this trade. It was behind you. It was beneath you. You were going the other direction. There were so many other challenges, and the VWAP never played into it. This is why annotation is important as well, guys. 46, right there. It's the same VWAP, 4650, 4650. It's the same VWAP. You got in above it. You got in at 69. You were in all the way up here, Trina. That's that 15-minute bar illusion. Great stuff. And guys, I'm telling you right now, if you're not posting in the room to become a better trader, you're at the mercy. You're like, hey, teach me how to do this, but I'm going to teach myself. No reason. What's going on, Chariot? I'm glad you got it worked out. Triggers up, transition, room to trouble. Triggers up, transition, room to trouble. That sounds like the perfect large chart read to look for a long trade. Let's see what you did. Market pulls back. There's your first close above, not really from an area. So you catch it when the small triggers roll up and you take it up all the way to the large short trouble. Just a trend trade. Nicely done, Chariot. You said you put stops below trouble. How did you define trouble? Was trouble trigger lines? Was trouble pivot low? Trigger lines? What if it does that in your perfect trade? So I ask, and this is one of the additions that I put in the KISS plan. When you're taking the proper trend trade, guys, where the market shouldn't go is below your pivot low. And that reasoning, and let me give you the logic. I like the whys as well, and it's a beautiful trade, Chariot, because the sellers are in control all the way, and that's their low point. And we want it to go up. So we're entering after the sellers fail, right? So they've already tried and failed, and that's why you use that low point, that pivot low, that pivot high for initial stop placement. And then as the market progresses and moves up, you might say, okay, they're above this zone in 1-to-1s, I'll go break even. And now they're getting above this zone, I'll put it behind the zone. So you're hiding behind things where the market should not go. Nicely done, Chariot. Let's go see what the live market's doing. Triggers are up. Strong side of the triggers. If I took an entry right now, I would be on the wrong side of small triggers turned against me. I would be trading directly into areas. Rules 2 not met. Large chart says look for a long. Wouldn't it be awesome if it pulled back to the mid band in this zone, if it tightened up, if it gave me a beautiful entry just above that VWAP where I had room to get to trouble? But if it doesn't, guess what? Not my money. I've got to wait for a better opportunity. It's the same read every time. First it's up, then it's strong, and there's just no room. And if there's no room, how am I going to make money? The likelihood is I'm not. Ninja Trader crashed. I'm having some Ninja Trader struggles. Guys, what do you want to talk about? What's on your mind? What's going to make you a better trader? I ask this a lot. I do. I ask this a lot. What do you need from me to take you a step closer today? If you're brand new, it might be a little bit on momentum. If you're brand new, it might be, hey, let's talk termination conditions a little bit more. If you're brand new, it might be, hey, go through that entry sequence again. That one that says pull back to an area inside of triggers when you have momentum and the potential to break. Momentum, 3 triggers passed. And I like this. Boaz says, I'm going to force him to go in the direction of my trade because it's not the perfect trade. He can manage risk. And beautiful targets. Nicely done, Boaz. Anyone having issue with Chart Prime? Did the 3rd step, signed out several times, no script. They be pissing me off. Start here. Go to your indicators. Go to invite only. Are they on there? That's going to be the first thing. I don't know what the 3rd step is. Okay, so you need to reach out to Chart Prime. Were you on demo or do you own? Or doing the monthly? Do you have the subscription? So your demo may be over. I would check that first. If you don't own them, your demo may have expired. That would be my first guess. You can reach out to Chart Prime though, and they're pretty good at taking care of people. But that would be my suspicion. Victor. You just said it was demo, but then you said that you bought the monthly on Chart Prime. So I would reach out to Chart Prime. I'm not Chart Prime. I would have them take care of you on that one. I don't know. I don't know the answer. I don't know what's going on their end, unfortunately, or what you've done on your end. Trend trade. Is it really, Victor? Triggers up, price on the strong side, space to the next trouble, small chart price pulls back, closes on the right side with a huge bar. You're in at 69. Is that really a trend trade, Victor? Or is that jump the fudge in and hope it keeps going? But your trend trade, I guess that was your close above. It's 63. No room at all whatsoever, right? You knew that. You didn't get in till 69, right in the middle of trouble. Guys, if your trend trade originates at 20 and you're in 50 points later, Victor, it's not a trend trade anymore. It's a jump the fudge in and hope for the best. Does that make sense? This is where your trend trade is. By this point, you are 50 points deep into a trend trade, directly into trouble. Now let's talk about when you've got odds favorable momentum, strong side of the triggers, Victor, you had a fighting chance. Nothing in the way. So both charts were the absolute best case scenario for more up. I'm going to say you probably got away with one there. But trend trades happen from the pullback to the area and the close above, and sometimes they just don't give you what you need. But everything was so perfect, it went up. And there's your exit. Nicely done. Does that make sense? Not knocking you. I'm just saying, man, trend trades come from pullbacks to areas. They originated areas. If you jump in halfway through, and let's go, I want to do this one more time. If you jump into a trade halfway through its completion, that's where the large chart targets really help you out from the strong side. Because what's the expectation? The bigger move. Which means from here, you had room to the expectation. You had room to make money. They just become difficult to manage is what it is there. Because where the market shouldn't go is down here. This is where you start hiding behind things, hoping you don't get that little bump bump like that. Good stuff. Good stuff. All the trouble in the world. I don't even have to do the rest of the read. All the trouble in the world. Iron sharpens iron. And marshmallows are delicious. And I don't know what that has to do with anything, but they're squishy compared to iron. All right, let me open up NinjaTrader again, guys. Sorry. I actually completely redid everything this morning. Deleted everything, started over. So let's see if we can get this up here and see what it does. Guys, this is where, hookah room again? No. My wife's in Georgia. Hookah's no fun without my wife around. She doesn't even do it, but I need someone to giggle with. There's one of those tails with momentum. You guys see it? Was it a trade? How can we tell? Is there a way to go back historically and see if that fit the rules for entry? Does everybody see the tail? The pullback? It's still calculating. I'm not going to touch it. I think one of the easiest ways to learn to believe that 90% of your day is doing nothing One of the easiest ways to really cement that idea and become comfortable with it is to go back and circle these tails, to go back and look at what they looked like. We're still calculating. To see that they don't happen all the time, to see that it's not a continuous trade after trade after trade after trade. And the likelihood of you taking 50 trades in a day and not over trading is pretty slim. There's another one, right? So from 9:55 to 10:12, not a big gap there. All right, Mr. Joker, great question. You're understanding momentum. That's the first rule. How are you with path? Not trading directly into lines that could stop the market. Are you getting comfortable there? Because that's the second one, kind of. So until you do become comfortable with that one, you're probably going to get run over a few times on trades, but that's okay. Let's go through the language one more time. Actually, let's go through it about 100 more times. And this is your language. And I think it's important to learn. Hold on. Let me get rid of this one real quick. To learn this phrase right here. Sell a pullback at an area inside of triggers. And I'm going to say it one more time. I'm going to buy or sell a pullback, and we're going to go through some pictures real quick, at an area inside of triggers. So when the large chart, it's like a flow chart, right? When the large chart has momentum, and when the large chart is not trading directly into areas, it's important that you guys understand that if you bypass that, if you go look for entries without advantages, you're more likely to lose than win. Does that make sense, everybody? Give me a why. This is a pattern. So when the large chart rules are met, this is your entry pattern. And we're going to go through. So we're going to talk about it, and then we're going to go through and look at some from the spreadsheet. We're waiting for a reversal bar, which means that we're waiting for the pullback to begin. That signals the beginning of the pullback. So you've got to sit through all of this if all you're trading is high probability trend trades. It's going without me. This stinks. Novak's a loser. This is no fun. There's my reversal bar. There's the beginning of my pullback. And once that happens, this is where the pattern comes into play. You will define exactly where the market is most likely to retrace from the top line of the large triggers to the bottom line. And there's two sets of triggers because there are large triggers. And if I put a circle around the large chart, large triggers right here, there they are. And there's small chart, large triggers. And those are the smooth ones. And they work together to define where the retracement is most likely to occur. So the tighter they are one on top of each other, guys, the more accurate you become, the more precise the entry location is. But trigger lines aren't bouncy. They never have been. They only define retracement. So when you look at your trigger lines, what you're saying out loud, scaring the dog, is that price could retrace all the way down to the very bottom line. And price may just retrace to the top line. I don't know which one it's going to be, but I've got my zone. Does that make sense, Joker? And then trades originate from areas, from fibs, from midbands, from yellow 1-to-1s. And this is your brick wall. If price is your tennis ball, areas inside, whether it is Fibonacci, whether it is midband, whether it is yellow 1-to-1, as long as they are inside of the triggers, these are most likely to create the bounce in the direction of the large chart advantages. So far, so good? This is how precise your entry actually is. Now, remember, your large chart has strong triggers up. Your large chart has absolutely nothing in the way to create a bounce. So the entry rules say your limit order is placed a tick or two above the highest point of support. Because with all of those forces on a bigger chart pushing up, we don't expect it to get too low. We know that it could, but let's be honest. I want to be in closest to the retracement, to the reversal bar, because with all of these forces driving up, they're really going to have to work to get to the next area. They're really going to have to work to get to the bottom of the retracement zone. Does that make sense? So your language is 100% consistent every time you take a trade. I will buy a pullback at an area inside of triggers. Price can exceed past large triggers, but inside of triggers, better trade. Well, let me get to the next one, OG. You ready? Anything beyond the triggers, below the trigger lines, is where the advantage of rule number 3 is no longer in play. Once I get below the trigger lines, I don't know if, when, or where the market is going to continue up. Once I get beyond the retracement zone, I have absolutely no advantage for entry in my corner anymore, which means that's actually where your stops go. It's not tricky if you learn the language. I will buy or sell a pullback at an area inside of triggers. So watch this. Boom, 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 boom. It's tricky if you don't practice it. Let me take the cheater off. Do you see momentum? Everybody in the room, if you're working entries, work with me here. Does everybody see the separation between the small and large? Rule number 1 is met. Life is good. This is a market where the market is likely to continue down. Does everybody see that price has not reached Fibonacci support? That all of my triggers are below the previous fib? My path is clear. I've got room to make it to that fib. Now here's the thing that you guys hate. But Mark, there's only a 1.5 to get there, right? Who wants to take a trade with a 1.5 potential? This is where the methodology kicks in, OG. Your small chart's cranking down, flying. Now, if we learn the simple phrase, are you ready? My entry comes from areas inside of triggers. While the small chart is still going down, I know where my trade's coming from. And look at that. They are coming up on that mid band, so I'm watching it. And as it goes down, now the mid band's in the equation. It's the lowest point of resistance inside of the triggers. So what I'm saying right now is that if this is going to be my trend trade, that mid band is my lowest area. I'm going to activate. Is it going to let me? Nope, it won't let me. I'm going to activate a limit order just below the lowest point of resistance. Let's make that not resistance color. Save that as default. Okay. So they still haven't gotten their OG, but I know exactly where my entry comes from. And I get another bar, and I'm excited. And I get another bar, and I'm nervous. And I get another bar, and I'm wondering if they're actually going to come get me. And then they do. And then I'm in the highest probability trend trade that I could ever take. And OG, the rules for stop placement say my stop belongs above the triggers, because they could go to the 1-to-1s. They could go all the way up to the fib inside of triggers. So I'll place my stop where the market shouldn't go, because once I get to the wrong side of the triggers, I don't know if, when, or where. And then the market bounces. Whoops. There it was right there. And then they said, oh no, we forgot OG, let's go get them. And they come back to the mid band inside of triggers. And they make it all the way down to Fibonacci support, don't they? Well, they do eventually. But your entry is the exact same thing every time. It's a pullback to an area inside of triggers. And once I get to the wrong side of triggers, I don't know if, when, or where. And I think we saw a good example of that earlier today with this one right here. So check it out. OG, just in case you were in the bathroom. Do you see momentum and path? I love going through this. So let's go to the smaller, faster chart. Do you see how the area is on the wrong side of the triggers? And once I get to the wrong side of the triggers, it is Upsville, population me. And that's why stops are placed there. So it's not that inside of the triggers is the better trade. Well, it is. Inside the triggers is where the advantage lies. And we can minimize risk by putting our stop where the market shouldn't go if this is going to be one of those winners. Does that make sense, everybody? I hope so. So if we go through those spreadsheets that I gave you guys, I want you to see something cool. I love doing this. I'm going to click on links from the spreadsheet, and we'll start here. Maybe. Come on. There we go. So, momentum, 3 triggers through, price pulls back to the area inside of triggers. Do you guys see it? It's the same pattern. This particular trade was from 2022. Momentum, 3 triggers through, pulls back to the area inside of triggers. Look where his stop is, where the market shouldn't go. This trade is also from 2022. This is 3 years old. It's the exact same look. Momentum, potential to break, pull back to the area inside of triggers. This was in gold in April of 2023. You just wait for it. OG, you will call your shots. I'm telling you guys, when you trust the plan, it's liberating. You start saying things like, I see the momentum, but I don't have a clear path. It's not my trade. And look at the reaction right off of that fib. It's ridiculous. And you'll say things like, when everything says up and the momentum is good, let's see what happened here. I like this. So check this out. You ready? I'm going to put just a circle right here. And I want to see where it comes into play. There it is. Do you see how the area is not inside? Not inside. You get one bounce from the area inside of triggers. It heads back up. That's what gives you your third divergence. And that's where the market goes down. And once you get to the wrong side, even with that look, it's over. And you'll learn to trust that. You'll learn to believe in that. You'll learn to say things like, not my trade. I don't want it without momentum. I can't take it if my path isn't clear. If my area is not inside of triggers, I choose to wait. And you literally will call your shots, guys. But the problem is, everybody wants the money. The money is a byproduct of the process. And if you circumvent learning the rules, all you're doing is trading your guts, guys. And there's not a lot of guts traders out there that find any level of success. Good lesson. Thanks, guys. Good lesson. Whoops, that was the wrong one. Triggers are still up. They're in transition. Not a lot of room right now. You would have had to trade into areas to take the trade. You would have had to broken rule number 2 to take the trade. If you did, you're feeling good about it right now. But does it win more than it loses? If you're familiar with Mark Douglas, one of the concepts that he talks about that's so important, and one of the things that's important that if you're brand new, you realize from the very beginning, and I'm going to do it like this, because AI said it beautifully this morning. Trading is a game of probability, meaning that no single trade is guaranteed to be a winner. It's important that you accept that. And a strategy's success is based on its win rate over a series of trades. You have to prove your plan wins more than it loses. That's what Nexgen hands you. Successful traders focus on having a positive edge, managing risk, and accepting that losses are a normal part of the process, other than trying to predict market movements with 100% accuracy. Don't put that pressure on yourself, guys. Key concepts. No strategy is 100% successful. Write it down. Losses are a normal part of a positive equity curve. There are good losses, which fit a plan that's been proven. There are avoidable losses. Jumping into trades into areas, not having the advantages that you need. Focus on the edge. What's the edge? The edge, dang it, that's not the right picture. The edge is having your advantages. That's an edge. That's loaded dice. Risk management is crucial because any trade can be a loser. So OG, it goes back to it. Knowing exactly where your stops go so that you don't impart your emotion, right? Has anyone ever said, I'll put my stop where it belongs, but if it starts to lose, I'll just put it below this fib and hope that fib holds? I watch it every day. The VWAP is part of the Chart Prime package. Think long term. A single trade's outcome is random, similar to a coin toss. However, over a long series of trades, strategy with a positive edge will consistently produce profits if it's followed, even if it includes mature traders, Ron. I don't know that I qualify. And then the emotional detachment, guys. Believing that trading is a probability game helps you remain disciplined. Fear is self-imposed. If you believe you know what's going to happen next and it doesn't happen, you've got to work through those emotions. But if you say to yourself every time you go into a trade, I have no freaking idea what's going to happen, but I have an advantage, that's when trading becomes effortless. You learn to accept losses. You learn to say things like, I'm going to take this trade because this is my best trade. And if those sons of bitches want my money, they've got to come get me down here where my advantage is gone. And guys, we give you all of that. You just have to learn it. 6 signs you know you're maturing as a trader. That's what Ron was referencing. You manage risk and then you manage reward. Guys, if you are insisting on momentum path and a defined entry, you're managing risk before you ever put your stop in place. You're completely relaxed because you trust your plan. You're just going through the motions. You don't force or chase trades. You call your shots. You demand the market give you exactly what you need to have your edge. Trading is not your adrenaline fix. This is for a lot of you guys. Go swim with sharks if you want an adrenaline rush, right? Go jump out of a perfectly good airplane. This is a business. This is your livelihood. Treat it as such. You follow a plan. How many of you have a trading plan? Not at all, Phil. Well, maybe we are. If you're disguised as a remora. This is my favorite one because I'm touchy-feely. Your worth as a trader and your worth as a person are 2 separate things. I watch traders beat themselves up every day. I watch traders beat themselves up every day, call themselves names. Guys, treat yourself like you were a 5-year-old that you're teaching to ride a bike. You wouldn't scream at them because their balance is gone. You wouldn't swear at them because they hit a curb. Give yourself a little grace. You're developing yours, adding more every day. Do you need more, Trina? Why? How many rules do you need? Just asking. And I'm going to show you why I asked, Trina. You don't have to answer. Oh, that's more common sense than a trading plan rule, right? Or maybe it's a trading plan rule. I like it, or before coffee. I like that. So not trading rules, self-discipline rules. I like that. Understanding your state of mind before you enter a trade is huge. It's huge. Miss Claire. Up, strong, room to areas, close above. And I told you guys, if you took this trade, you had to break rule number 2, right? Claire says, with this look, with this perfect entry, I'm willing to take a shot. Take and manage. Now, some of you are like, Claire did it wrong. No, Claire did it perfect for Claire. Nice trade, Claire. Nice trade. No worries. I hope she had a great flight. OG, thank you for asking questions. Don't stop. Keep asking. The people that sit up against the wall hoping to become great traders through osmosis rarely do. Get to where you can post pictures. If you need help with that, let me know. Let me know. Pictures are great. They tell me everything. This is what I saw. This is what I did. And Claire knows what I'm going to ask. Claire, did you realize you were trading into trouble? And make the choice to trade in, prepared to manage. That's it. Claire did. I know Claire well enough to know. She said, this is a bar fight, Mark. I've got I'm strong. There's room. There's the perfect entry. I'm not fighting the small triggers. I'm willing to go against that one zone. And you won. Nicely done. Nicely done. And I love that you snap the picture right before profits are taken. Good stuff. All right, guys, I'm going to take a minute. Large chart read. Triggers are still up. Give me a Y if you see it. Triggers are still up. But market's going down. Triggers are still up. And we reached an area. And if I got a close on the correct side of the area right here, would I have room to the VWAP? Whew, it would be tight. It would be tight. What confuses you? They're going to the right, right, Jen? So let's do this. For the brand new user, the mouth is pointing this way, right? Which means they're flat. What were they before they were flat? Up. Well, there is no strong, Phil. It's either up or down, right? It's either up or down. So until they actually point down, until they actually pinch, roll, open the other way, down is never an option for me. For me, making it personal, because I don't tell you guys what to do. So what's the read? The triggers are still up. I'm on the weak side. And I either have room or I don't. So if I take a trade from the area inside of triggers, or with a close on the correct side, I can't trade directly into these one-to-ones. I can't trade directly into that VWAP. That VWAP's sitting there all pretty. So Jen, this becomes a non-issue because no matter what, a long trade doesn't really have room before it smacks into trouble, right? But you'll see this a lot where people try to anticipate the reversal. But they're up, right? They're up, they're weak, there's room. So what if you got to close above right here around 43? We got 43 seconds to worry about it. Would it fit the plan, Jen? There's my trouble on the large chart. There's trouble on the 1 minute. Yeah, there's one-to-ones right there. There's all the areas. I mean, my goodness. There's just nowhere to go. But what if it opened up like at 43.25, just above, with room to make some money to trouble from the weak side? That'd be a kick-ass trade, wouldn't it? But it already reached your target from the weak side. What if you went long anyway? Whoops, paper trade. Guys, this does not fit rules, but what if you went long anyway? Just to go in the direction of the triggers and said, you know what? What if? I'll manage. That would be your right. But what do you see on the small chart? Mid-band, zone, one-to-ones. There's like 100 things that say you're more likely to lose than win. But if it wins, I don't even like watching it. But if it wins, are you going to change your plan and start trading into areas because of the one time it broke? And this goes back to the idea of probabilities, guys. When I say that an area is more likely to hold when price reaches it and triggers don't break, it's not because it held every time. Areas break all the time, even when the rules say they shouldn't. So we use trigger lines to gauge the likelihood. But it's the Ron Burgundy. 60% of the time it works every time. You're more likely to lose a trade into the area than you are to win, which means you don't have an edge. The probabilities are not on your side, right? Yesterday, look at that. It's still not going anywhere. Yesterday, we didn't take one trade during the day. We couldn't seem to get our rules met. You tend to anticipate a roll. Stop that. Stop it, Jen. But we all do, right? Because if we anticipate a roll, watch this. If we anticipate a roll, then all that trouble doesn't matter, does it? If I'm thinking short because they're flat, none of this matters to me. I start saying things like, oh, it's just a momentum trade down. I do it too. Right? But they were flat here for a while before they turned. Here they're totally flat. That is a true flat, right, Jen? Can't make up their mind, caught between areas. That's a true flat. That's the nothing to do, sit on your hands look. But until they actually roll, hell, they could go all the way up here to 871. I just don't know. I just don't know. I love not knowing. I love having no idea what the market's going to do. It takes all of the trouble off me. Ah, Phil, I know that one from Mad TV. That was so funny. I just saw that. The Bob Newhart, stop it. I remember watching that. And look, guys, it worked. They're going up with the triggers because the triggers were up. And that was kind of what I was hoping would happen. Does that make sense? I think that was a great lesson. They're still up until they do that. But for the new people, if you can't make a decision, a lot of times it's better to not form an opinion. Pretty good lesson, yeah. I love the lessons, guys. All right, I'm going to walk away for a minute. You guys do you. Stretch your legs, call somebody that you love, whatever. I'll be back in just a couple minutes. Always kiss the dog. Finish strong. Um, Big Rat, John Novak got you right there. He said use the workspaces from the website. For those of you that don't know, we've got all, whoops, wrong one, instructions. Oh, there we go. There's the link. Thanks, John. And there's two sets on here. There is the everything, and then where's the simple, John? And there's also the really simple ones as presented in the room. They already have them applied. Yep, there you go. There you go. And if you want workspaces that look like mine, let me know. I'll give you the workspace. All right. Momentum up. Only 2 triggers through. It doesn't fit the plan. There is no divergence. That's a good look. Guys, do you see how divergence killed the potential to break? That's one of the best lessons I can give you guys. Divergence is one of the absolute biggest killers of those potential to break trades. And for those of you that are brand new, it is such an important factor that it tells you in the checklist, divergence, no trade. It reminds you before you ever get to management, divergence, no trade. And in management, it tells you if divergence prints, exit the trade. There's a reason, because this plan is designed to optimize your chances of success. and look at it push through. You're welcome, Jen. Thanks for giving me the opportunity to. I say it a lot. You guys are why this classroom is so amazing. You guys are why the education is so good. Like, I have what I want to talk about. I always do. I want to talk about momentum. I want to talk about path. I want to talk about rules adherence. But you guys say, hey, Mark, here's where I'm wondering, right? I'm wondering about this. And I don't think I'm going to get rid of market flow. Let's make it clear. Triggers are up, right? I do have room to trouble. It is pulling back. I've got one-to-ones here. Are we going to get an entry? If we do get a close on the correct side of the triggers, I can't trade directly into the VWAP. I can trade from the one-to-ones. So my entry needs to be somewhere around 52. So I need trigger lines to catch up and kind of get me where I need to be. And look, it's pushing lower. So now I have to give myself room back if I take a trade. What would you guys like to talk to? Apex mentality, how we doing? Did you get my message? I sent one over to you. Z-Robot, how's the day going? Justin Raygun, what can I do for you? Andy V, how's things? Ron C, it's almost beach time. Koki, good to see you in here again. Muser, always nice to have you. Miss Claire, any questions? Morgan, you're quiet. Izzy got game. Yeah, he does. Ooh, 45, that is cold. Got E. Webster back in here. Neo's here. Chariot's here. A lot of you guys are coming back. You're sitting in the crowd. What can I do for you? Most people don't come to the room because they have a crush on me. They come because they're like, man, I need something. I need something. There's something not right in my trading and I have to figure it out. And that's cool too, hanging out, community. I'm okay with that. Ron, like a scared turtle. All right. Hey, look, they're trying to give us a close above, but they haven't yet. Trading is lonely. I think if you hear the same thing 100 times, Phil, it starts to stick in. And I think that there's enough lessons out there that we sometimes don't even know the lessons that we need. Right? 17 seconds. It is directly into a mid-band, though. Does anyone have rules that say don't trade into areas? Make sure you have room to make money. 60 to 65 is $100 worth. I'm not even on paper trading. That was the close above. It's tight. It's tight. 3 inches of fresh snow. Yeah, my buddy sent me a picture from Spokane. They're covered in snow. I left just in time. I left just in time. You're limiting to highest probability, nothing at all in the way, so 0 trades for me on NASDAQ today so far. Right on. You just dodged a bullet there, didn't you? And I can tell you, Phil, your plan will grow a little bit over time. But what happens is, and my brother used to say this, if you can't make money the easy way, how are you going to make it the hard way? If you can't make money with the highest probability trades ever, how are you going to make it with the more difficult trades, the ones that need to be managed more assertively? And I thought that was pretty cool. And I don't disagree. Waiting is working so far. Is that the week? Hell, even if it's not the week, how many people in society make $9 grand a month? Not a lot. 28 trades. It's the last 2 weeks. 4,500 a week. Let's round down for the sake of math. 4,000. How many weeks are in a year? 52. Well, hold on. Let's do this. Divide it by 5 trading days in a week. So 800 a day times 252 trading days in the average year. That's not so bad, is it? What if you only caught half of that? Would anybody be upset? What if you only caught a quarter of that? Everybody in the room's making at least 50 grand extra disposable income from their trading right now, right? $200 a day. Why not learn how to make that? Man, these areas just aren't giving it up. They keep trying, but from the weak side of the triggers, they keep holding. It's the ES doing. The momentum is up. Only 2 triggers through. Divergence, divergence. Ugh. The fight is on. The trend is up. The momentum is up. They just got to get through some of the nonsense. Shenanigans, I believe they call it. It's your fault. Why? You do you, Phil. You do you. Who saw it start to go up and said, oh no, it's going without me? And then it bounced back down. You're like, crap. And then it started back up and you said, oh no, it's going without me. And then it started bouncing back down and you said, crap. I've never done that. What would you guys like to talk about? John Novak, anything on your mind? That's a loaded question. Momentum, not quite path, but from the pullback to the area inside of triggers, there's room to manage into trouble. Take and manage, right, John? And as you get to trouble, go break even. Take and manage. Phil entered above the 1-to-1s. Why? Triggers up, transition, pull back to the area, close above. It's just a beautiful trend trade. Stopped on, deeper retrace, 15 minutes slowed, 30 minutes later, and was stopped for a small gain. That's the one, but you're right on it. So a tick is, I mean, you took the right trade. You were above trouble, right? Just got to watch it. Oh, you got in all the way over here. And it went sideways. And then it started to go. I may have taken that same trade. How to make a winner look bad. New stop 200 locked. So John, you made $1,000 and you're upset. What a great problem to have. I bet most of you can't wait to be pissed off by making $1,000 a trade. It's a real thing. When you trust your methodology, when you believe in the advantage, when you learn your rules, you start getting bummed out. Oh man, I only made $1,000 today. I only made $500 today. I only made $600 today. Man, what kind of exit was that, Novak? I'd like to apologize on behalf of the company. John Novak got paid at Trouble and Trouble didn't hold. Great trade, John. Beautiful trade. Beautiful trade. Would take that trade every day. All right, I'm going to mute. I'll tell you